Hello, everyone, and welcome. My name is Daniel Malloy, and I'm the CEO of the Alberta Retired Teachers Association. I want to thank you for joining us today for this seminar presented by our Pension and Financial Wellness Committee. ARTA is pleased to offer a series of financial wellness seminars this month to create an opportunity for education on topics specific to retiree financial wellness. Since ARTA was formed in 1963, we have focused on supporting our members in an engaged and active lifestyle in retirement. Our holistic approach includes one of the best retiree benefits plans in the country, as well as many additional programs and services, including our discount program, physical wellness events, social opportunities offered through our regional branches, scholarships for family members, and of course, seminars like this one. ARTA also serves as an advocate for teachers and retirees, using our collective voice to draw attention to the ATRF and teachers' pensions, the Seniors Drug Plan, the Choice in Education Act, and most recently, curriculum development. There are many different factors that allow ARTA to maintain such a wide reach, but in the end, it all boils down to our organization's financial wellness and sustainability. As a not-for-profit organization, we take any surpluses we generate and put them right back into our benefits plan. And because we were created by retired teachers for retired teachers and like-minded professionals, we remain dedicated to our retirees. 2021 has been a year of significant change for ARTA as we began to self-administer our retiree plan. While there have been hurdles to overcome in this transition, our dedicated staff have been working tirelessly to connect with each member and resolve independent, unique issues. While the initial transition is not as smooth as we had hoped, we know that the long-term benefits of self-administration will be worth these initial frustrations. And one is increased financial sustainability, and look for major plan improvements coming this November. We thank you for your loyalty and your continued support of ARTA. With that, I'll pass things off to ARTA's Chief Financial Officer, Mr. Scott Tawaniak.
Thank you, Daniel. Good morning, everyone. My name is Scott Tawaniak. I'm the Chief Financial Officer for the Alberta Retired Teachers Association. We're excited today to host our third of three speakers this month. I'm joined today by Leo Richer, Chair of ARTA's Pension and Financial Wellness Committee, along with Pension and Financial Wellness Committee members Blair Lowry, Sheila McKay, and Ray Hoger. ARTA's past presidents Marilyn Bossert and by Lisa Sissons, our Executive Assistant. Now, as you may have noticed, we've disabled attendee video and audio capability. This helps to ensure a quality experience for all participants by limiting the web streaming. It also allows us to record this webinar for future use without breaching your privacy. With your audio muted, we encourage you to use the question and answer feature found at the bottom of your screen to submit your questions. You can submit questions publicly so that all attendees can see them, or submit them privately, and then only ARTA staff will be able to see them. Our team or the speaker will respond to the questions at the end of the webinar. With those housekeeping matters completed, I'd like to welcome today's speaker, James Mctavish. James is currently a Senior Advisor, Investor Education at the Alberta Securities Commission. There he leads the investor and consumer education campaigns designed to help Albertans strengthen their financial literacy and protect themselves from investment fraud. Before joining the ASC, James worked for nearly a decade in the rapidly changing technology space, delivering communication campaigns and holding senior positions at global technology companies. James holds a Bachelor of Communications from the University of Calgary. Today, James will be sharing a presentation entitled Recognizing and Avoiding Investment Scams. And with that, James, I will turn it over to you.
Awesome. Thank you, Scott. Wow, it's like you knew so much about me. It's almost like I provided you that little write-up about myself. That's great, though. Thank you. So yeah, exactly that. I am a Senior Advisor of Investor Education for the Alberta Securities Commission, and I'm really honored to be able to present here at the Financial Wellness Seminar about recognizing and avoiding investment fraud. Ultimately, the tools we'll give you today and the knowledge we'll give you today will help you recognize and spot and protect yourself from investment fraud and help others that you may think are involved in some type of scam. And just before we dive in, just a reminder, folks, today that the presentation is to provide helpful information about securities and is not intended to provide legal, accounting, or other professional advice. I would also like to remind everyone that today's presentation, like Scott mentioned, is being recorded and may be shared on social media and video streaming platforms for educational purposes. So who are we? We've presented with ARTA in the past, but just a recap of the Alberta Securities Commission. We're an industry-funded agency, so by that, we're funded by market registrants and new companies going public here in the Alberta market, and not taxpayer funded. And we're responsible for administering the province's securities laws. So we employ over 200 employees who create and enforce the laws, rules, and regulations that govern the Alberta capital market. And with that, we're really entrusted with fostering a fair and efficient capital market, and really making sure that companies are acting accordingly with securities laws, and that Albertans are protected and they have a resource to go to when it comes to dealing with any type of securities type of law infraction or scam that they might encounter. And additionally, we provide independent, unbiased resources to Albertans, like this presentation today, as well as our checkfirst.ca website, which provides a wealth of investor literacy material, as well as information regarding investment scams. And most importantly, the ability to check registration for any individual or firm that's offering you an investment or security. So really useful tool there. So what we'll talk about today, we'll be talking about fraud facts, common types of investment fraud, the red flags of fraud, how to protect yourself, and how to report an investment scam. So first things first, what is a security? It's in our name, Alberta Securities Commission, and it's really a financial instrument that holds some type of value. So when we're thinking of investing, immediately we're thinking of stocks, but it's also bonds, mutual funds, ETFs, even loans and promissory notes. No matter what the name is, giving money with the expectation of a return is a security. And something to remember, because fraudsters will actually use things like loans or promissory notes to try to circumnavigate around securities laws with their scams, but they are in fact a security. So something to be mindful of, and if you encounter it, we're always a resource to help you. So fraud in Alberta. What percentage of Albertans believe they've been approached with an investment opportunity that may be questionable, not entirely real, or potentially fraudulent? The answer is 48%. And between the ages of 45 and 54, that's 54%, and age 65 plus is 60% of that number. So it's really quite prevalent. And the fact is that fraud does happen. So the more we can be aware of the circumstances, the situations we find ourselves in when it comes to investment fraud, and most importantly, the red flags that come up with any kind of investment offer that's offered to us, the better we are at able to protecting ourselves and protecting others that we see that it could be happening to. Before we dive in even more, I always like to show an investment fraud testimonial, and this is actually from an Albertan.
I am not a high-risk investor, and I have a very good knowledge of investments. I was really skeptical at first, and it took me a long time to get involved in making an appointment and deciding. They figured that I needed to retire, and they had some things to offer that would help me retire earlier. I felt a little bit rushed in doing that and didn't have time to make a decision properly, and I should have known better. I really never felt good about the guy from the beginning, and then he ended up taking my money and promised me these great big returns. When I felt that something was wrong and my investments weren't doing anything, I had called him on the phone and got pretty nervous. I thought, this is not going to be what I figured, and he was pretty positive and keeping my hope up. I realized that I lost my investment when I wasn't getting anything forthcoming. I asked the company to reimburse my RSP money, and they said there's nothing there to reimburse. My money was hard earned. The investment was a big investment to me, but you have some nervousness about what you'd done and how you could have used the extra money. My experience working with ASC was positive. They were sympathetic, and they were trying to see what they could find out for me and go forward. Check your investment carefully. Check the people that are offering the investment. Take your time. Don't go into it right away. If you can't lose the money, then you shouldn't be looking there.
And that's an unfortunate story from Mabel. And there's some key things there to pick out from her story. The first being that she was told that she should probably have the investment goal of building up her retirement. And really, when it comes to investing, this is about setting your own goals and really working towards those, and not so much getting someone else to tell you what your goals are. So that was the first type of red flag. Scam artists like to try to build a story for you, build a reason for why you need to invest with them. And the second is that she immediately did not feel comfortable with the individual that was offering the security. Now, don't be a victim of your own politeness. There is no financial advisor that you must work with. If you don't feel comfortable with them, you certainly do not have to work with them. You can find a different one. And same goes with any type of investment, regardless of your risk tolerance. Even if you've checked it and it fits, but you're just not comfortable with it, it's certainly not something that you need to or have to invest in. And so those are some key takeaways from Mabel's stories. And the impact of investment fraud goes far beyond just financial implications. The way that a fraudster works is really about grooming their particular victim. It's about establishing that trust, building that foundation of reliance in regards to finances, about well-being around your finances, and then ultimately crushing that trust when they ultimately steal your money. And so this can impact your emotional and physical well-being. It can impact your relationships with others and your trust in others. And trust is so critical in our friendships and in our friends and our family and our day-to-day life. So the impacts go far beyond just the financial component. So common ways of being approached. It's coming from all angles, really. Social interactions, cold calls, advertisements, and now more than ever, you'll see scams that are advertised on things like Kijiji on the internet as being great work from home opportunities, seminars, online seminars, really dedicated to giving you the insider tips and the stocks that you need to get into, followed by very, very heavy sales pressure tactics with constant phone calling afterwards and correspondence with you to invest. There's things like boiler rooms where you'll get called to invest in a particular investment and just bombarded with information to get in. These are all ramping up right now during COVID, as there's a lot of interest around COVID relief, technology around COVID, ventilators, but also the market afterwards when we reach our new normal and we get out of this pandemic, the opportunities there. So again, scam artists, just like regular businesses, are looking to come out of this and be stronger, and they're trying all the different tactics as possible to try to get you involved in some type of trend or some type of investment that you might think is coming out of this pandemic as being the next best thing. The other area that's very, very interesting, and one that we see quite heavily here at the Alberta Securities Commission, is social interactions, and in particular affinity fraud, which I'll cover in the next couple of slides. But really this permeates into friends, families, social media, even chat rooms and associations where there's friendships established online. And during this whole pandemic for the past year, I think a lot of us have really leaned on those online communities just for communication and day-to-day interaction. And scam artists are even infiltrating those to really sell their scams. So after this presentation, I hope the red flags and the tactics that I'll walk through help you even see it through online channels. So common types of fraud. The three that I'll go into in depth right now are affinity fraud, Ponzi or pyramid schemes, and pump and dump schemes. So I'll start with a quick video that covers both affinity fraud and Ponzi schemes because they often run hand in hand together.
Affinity fraud can happen to anyone, but seniors are often a targeted group. You could be targeted by someone close or a member of a group with common interests. They'll use their relationship with you to get you to invest, often without you having done any research on the investment because of the trust that you have for the person. When a fraudster targets a group, they'll build relationships with influential members to gain acceptance. Ultimately, their goal is to convince these leaders to trust their investment advice, and in doing so, convince others in the group to invest along with them. The leaders often have no idea the fraudster is out to steal your money for their personal use. In the end, you're left with a huge loss and are less likely to report the fraud because you don't want to lose a friend, or you simply can't believe your trust could be abused that way. Protect yourself. Know the red flags. Be suspicious of anything that seems too good to be true, and research anyone who gives you investment advice, no matter how trustworthy the person seems. Don't be drawn in by lofty promises. Even short-term initial returns may be false. Many affinity scams are Ponzi schemes, where new investor money is used to make payments to earlier investors, giving a false and temporary illusion of success. Ultimately, research the investment and the person recommending it. Ask plenty of questions, and consider seeking advice from an objective third party. Check first and research using the ASC's resources before you make a decision to invest.
And just to recap on affinity fraud, it's quite insidious. The fact that you could ultimately get a scam being offered to you by a friend, a longtime friend or a family member really helps drop your guard. And that's exactly what a scam artist wants you to do. They don't want you to research, and they want you to trust in the friendships and your family. So it's one that is quite prevalent, especially during the pandemic, where people are looking for the connections with their friends and family. So it can happen in religious organizations, ethnic communities, social clubs, professional associations. Really, the fraudster here is acting like part of the group, really to enlist those around you to start promoting and selling their scam. The best way to avoid affinity fraud and combat it is to always look at where an investment offer that's been offered to you originates from. So even though it comes from your friend, don't let your friend's lack of research or your friend's supposed research be your research. Dig in further, find out where it originates from, and then check the registration of that individual, as well as the legitimacy of that investment offer. And like I said, most times affinity fraud is closely linked to Ponzi schemes. The affinity fraud angle of getting friends and family to help promote a scam, the scam itself could then be a Ponzi scheme in which investors' money is funneled up the chain to the person who started the actual scheme. And really, money is paid down in a little bit to some early investors just to help promote it and to make it seem like it's credible. But really that money is really from other defrauded investors, and there is no legitimate investment behind the business. There's nothing real or tangible. The other one I want to talk about today is pump and dump schemes. And this is one that has kind of grown during the pandemic. And it's really been centered around companies or fraudsters who are promoting perceived COVID relief or COVID technologies or vaccines. They really talk about a company that is going to be the next, big vaccine maker. And really what they're doing is, while they're promoting this company, it's actually a shell company that's worth maybe pennies. They buy thousands upon thousands of shares. And as they promote it and get other investors to buy into the shell company that's maybe listed on the TSX Venture, the stock price increases. So as you can see in this graph, they might buy it at $5 a share. And as it increases to $15 and hits that peak, the fraudster will dump all of his shares, make a large amount of money, and by doing that, just collapse the value of the share itself, leaving all the other investors with worthless stock. And so this is something that is happening right now with COVID. New ventilators, new vaccines, different types of masks, whatever they can think of that can jump on the trend of COVID-19, they'll do that just to pump and dump a company. And other common types of fraud, binary option scams. And binary options are like bets on how an asset will perform in a limited amount of time. I like to think of it as all or nothing wagers, similar to gambling. So investors are required to maybe create a trading account on these platforms that are advertised on, say, Kijiji or Craigslist, and supply their credit card and other personal information. And once they make an initial deposit, before they start even trading, that money is already gone. A lot of these binary options websites are kind of started and originating in other countries. And they'll require, a startup fee, maybe even a training fee, and any money you deposit into the trading platform for actual trading might not actually, go anywhere other than the fraudsters' pockets. So they'll actually present to you maybe virtual gains when you're doing your binary options, but your money is already long gone, and these websites are completely fake. It's also worth noting that selling of binary options to individuals in Canada is banned. So something right there to be aware of if you're ever interested in binary options or you see these advertisements and you click on them. The next is Forex scams, and this is foreign exchange trading. And while this in itself is not illegal, foreign exchange trading is really the rapid trading of currency on the market. And really, this is to capitalize on the fluctuating changes in price to really benefit yourself. But it is very complex and it requires multiple trades throughout the day to actually capitalize on the changing price of currencies. A lot of scam artists will promote this as a great work from home opportunity, seeing that a lot of people are facing unemployment, or maybe you're retired and you're looking for extra income and you're looking for an easy way to do so. Forex trading is certainly not an easy way of making money from home. And scam artists will utilize this to promote, again, a fake platform with fake trading and training as well for Forex trading, with all your funds that go into this fake platform disappearing. And again, these are also offshore or in another country and really, really hard to get back or to find out where they originate from. The next is recovery room scams, and I'm actually going to save this one later. I'll talk about this one. And emerging sector scams, and I'll move into the next slide just to talk a little bit about that. And really, emerging sector scams will capitalize on a variety of different things that are really trending in the market. This could be things like cryptocurrencies. This could be things like binary options. Cannabis. Cannabis is recently skyrocketed in value across the many different companies that are offering it. With the relaxation of laws around cannabis in the US, there's definitely more interest in the cannabis industry. Fraudsters would like to tap into that because they know there's interest. Day trading, again, unemployment is high in Alberta right now, and there's a lot of retirees that are thinking about, making that extra income with, their 9-to-5 day and how to, get into investing in deeper scale. Scam artists will like to jump in on that. Forex trading, like I mentioned, crowdfunding, robo-advisors. Now, robo-advisors, there's a lot of great ones, Wealthsimple, Crush Trade, but it's not uncommon for scam artists to spoof these websites and create their own robo-advisors that are completely fake. And once you put your money in it, it's gone as well. And exempt market investments are another opportunity for scam artists to sell you on a fraudulent scam. Exempt market investments, like private equity, actually follow different rules than most investments, based off of what they're trying to do with their business. Typically, an exempt market security is one that doesn't need to provide a prospectus. And a prospectus allows you to understand the business, where it's going, how it's funded, where it sees itself, and ultimately its goals. Additionally, with any kind of stock on the market, they're expected to provide quarterly reports on the performance, as well as news releases for any type of material changes in the business. So whether it's a new product or a new market they're going into. With exempt market securities, you don't actually get access to that information. You might get a brief prospectus on the company's business, but it's quite limited. This is perfect for scammers who might also say that their reported investment is exempt from those types of information. And it's something that you really have to do your research behind. And it's even worth it to contact the Alberta Securities Commission if you're really unsure about a particular investment that's considered exempt. It's very high risk even when they're legitimate. Now, we talked about the most common types of fraud, the impacts of fraud, but what are the red flags to help you really recognize those too good to be true types of investments? And the first is guaranteed high returns and no risk. If investments gave high returns with no risk, we'd all be rich at the end of the day. And you have to ask yourself, why would this person be offering this investment to me if they can guarantee themselves high returns with no risk? By the virtue of investing in itself, high returns equates to high risk, same as low returns equate to low risk. That dichotomy will always exist. And there's no such thing as high returns with no risk or guarantees of no risk. So as soon as you hear something like that, that should be a big red flag that pops off in your mind that you could be dealing with something that's fraudulent. The next is great investment opportunity. Your friends can't be wrong. Again, this is affinity fraud, and it's really relying on the trust and your friendships to sell an investment scam. This is to really create that credibility around the scam, and essentially it's relying on that trust you have with your friendships to not do your research. No matter where an investment opportunity comes from, you have to do your research, and you have to know where it originates from. The next is insider tips, profit like the experts. This happens a lot at these seminars where high pressure sales tactics are combined with these insider tips of, I know this company is guaranteed to start making huge money in the next 5 months, 6 months. When you start hearing things like this and you start seeing the high pressure sales tactics of, I know this company, you have to get in now, trust me, it's going up. That's another red flag of fraud, where you're starting to see this kind of pressure from the individual to get in, and this guarantee that they know that this company or these companies are going to skyrocket. And this is also really kind of tied into this one, which is don't miss this opportunity, get in now. Part of really taking down any kind of scam and really spotting that it's one is doing your research. And fraudsters know this. The opportunities to do your research, if they can kind of crush that and make sure that you don't have the time to do so is important to them. And by saying that this is an exclusive opportunity that's time sensitive, really forces you to kind of hand over your money right away in the hopes that you don't miss out. Don't let that ever be the case. No credible investment advisor will ever kind of push an investment on you right away and stress urgency. It will be there tomorrow morning. It will always be there. Don't let that be something that distracts you from doing your research. Offshore investment tax-free. Now, as Canadians, we have certain avenues to take our investments and have some type of tax-free benefit, such as tax-free savings account or the RRSP. But in terms of tax-free investments in themselves, those don't actually exist. And a lot of times, these offshore investment tax-free advertisements really lead you to a platform that's in another country that's completely fake. And when you go to invest in it, again, just takes your money. So be aware that these advertisements for tax-free investments is a huge red flag. You can only delay or defer taxes, but you can never officially remove them. And the only true way to have your investments tax-free is through a tax-free savings account. And I used to not include this in my presentations, but as of lately, I've thrown it back in. But celebrity endorsements, it must be legitimate. And a great example of this is Elon Musk really trumpeting Bitcoin and GameStop and these different companies. Now, GameStop is legitimate, and cryptocurrency is slowly being recognized as a type of security, even though regulations around it are still getting improved. But the fact is that we should never ever rely on a celebrity's endorsement of a security to be our guiding path for investing. It should always be tied to really our investment goals and our research. And additionally, there's a lot of fake advertisements out there that might throw or slap on a celebrity's face or fake quote that you should get in. Never let that distract you from doing your research and seeing if it's suitable and legitimate. And finally, check registration, huge one. Very few financial advisors can sell securities without having registration. It's a critical first step before you work with any individual or firm. And if someone tells you that they don't need to be registered, you can always reach out to the Alberta Securities Commission, and we can help you review that and check if that person is allowed to sell to you. But more often than not, registration is required to sell securities here in Alberta. And we understand that it might be difficult to recognize fraud and how it could happen in the situations it can happen in. And that's why the Alberta Securities Commission and Check First created Don't Be Fooled by Fraud. And you can check it out for free at checkfirst.ca/playbook. It's a completely free guide that tells you the tactics and steps a fraudster will take to implement any type of scam and really gain your trust and ultimately take your money. Additionally, it will also provide you with actions you can take at any stage to recognize, avoid, and report that scam. This is a great playbook, and I definitely suggest everyone take a chance to go to our website and check it out. And the Fraudsters Playbook, I'll give you a quick run through of the steps. It's composed of 7 steps. Now, the first is identify a possible victim. And within this step, a fraudster really looks around for someone who it might not have a financial plan, might not have investment goals, and might have some kind of really some type of need financially, whether that be a loss of employment, maybe they have FOMO, so fear of missing out. They really kicking themselves that they didn't get in Tesla really early, and they're looking for that next big thing. Someone who doesn't have any types of investment goals, so they're just like, I want to get investing, but I don't really know where to start, but I want to make lots of money right now. Or someone who's retired and is looking to increase their retirement nest egg or leave something for their kids. So fraudsters look for these different angles to get in with someone. And that's really step 1. Step 2 is then they befriend and earn trust of that particular target. And so here they're really about establishing that great communication, establishing that trust, and really becoming that confidant in the person's life. Here we see fraudsters really increase the intensity of the communications with the individual, always constantly talking to them, maybe taking them out for dinner, pre-pandemic times. But regardless, always contacting them and being that that trusted friend. Once they've befriended and earned that trust, and they've really kind of become that trusted person in the individual's finances, they might showcase the benefit of investment. So they might talk about the new car they bought or their nice house. They might dress really well. Really, this is about to show success, and they like to sell that air of success to you. And that's when they go into step 4. They offer the opportunity. So once they've got your trust, and they've showcased how well they've done, it really sets it up where this opportunity sounds like it's coming from a trusted resource. It's good to go. It couldn't be more legitimate, and you're ready to hand over your money, which is step 5. During this time, the fraudster will be very, very communicative. We'll try to tell you, hey, you got to get in right away. We got to jump on this. All the red flags start to kind of pop in here around getting that money. And once that money is received, then you move into step 6, which might take a while to happen for the individual. You might realize, hey, I can't get my money back. He keeps providing excuses, says the money has to stay in longer with the investment before I can take it out, or he might stop answering my calls. It's hard to meet up with him. This is when the individual starts to realize that the person has disappeared and they're doing the ghosting act. They received your money and they're long gone. At this point, people usually kind of figure out that they're involved in an investment scam. Now, step 7, a lot of people don't know about, but after you've been involved in an investment scam and defrauded, fraudsters might actually contact them again, and they might act like the Calgary Police, the Edmonton Police. They might act like the Alberta Securities Commission. They might act like lawyers who are trying to help you recover your investment. And the catch is that there is a fee. Now, once this fee is paid, the fraudsters take off, and the person who is defrauded again. So it's awful, awful thing, and this is considered the Recovery Act. So this is really the tactics that a fraudster uses to groom their potential target, find their target, groom the target, and really ultimately steal the money from them. So with that being said, we've gone through the different types of frauds, we've gone through the red flags, as well as the tactics that a fraudster uses. So how to invest safely? And here at the Alberta Securities Commission, we broke it down into 3 main components: check, protect, and invest. I'll go through those. So if you're working with a financial advisor or plan to work with a financial advisor or individual with your investment strategy and your goals, the first step is to check registration. Bar none, it is so critical and important that you are understanding if this person is registered and lawfully allowed to be selling securities. Now, checking registration can be done at checkfirst.ca, and is actually a great tool that is free, and it takes less than a minute to do so. And when you check the registration of an individual or firm that's offering you investment, it's actually really interesting, because it also provides you with an understanding of have they acted against any securities laws. So do they have any disciplinary history? And all that will be recorded there. It will also tell you the types of securities and investment products that they're allowed to sell, which is also great to understand. If you have your mind set to certain types of securities that you want to purchase, it will help you understand if that advisor or that firm can help you buy them and trade them. So that's great to have. And beyond doing that due diligence of checking the registration, it's also about understanding if the advisor is right for you. Now, just going back to Mabel's story, right off the bat, she felt uneasy and uncomfortable working with that individual. And same goes with any advisor, even if they're registered. If you feel uncomfortable working with them, or you just feel something's off, or maybe their approach to your investment strategy doesn't really fit what you were envisioning, you do not have to work with them. Don't, again, feel like you're a victim of your own manners. You do not have to work with any financial advisor that you don't feel comfortable with. And additionally, it's great to ask the questions around how are you paid? Now, financial advisors can be paid hourly. They can also be paid by commission off of your investments, or some combination thereof. Make sure you ask these questions to understand how they're being paid, and if you're okay and comfortable with how that might eat into your returns, and if you can afford it. How will you help me reach my goals? Now, there's a variety of financial advisors out there, some that focus on retirement goals. There's some that focus on high risk, high returns investments, to some that focus on very low risk, just mutual funds. So there is a variety of advisors out there, and it's worth asking them, how will you help me reach my goals? And more importantly, are you comfortable with the suggested path forward that they're suggesting to you? And what level of service can I expect from you? The relationship with a financial advisor is almost like a relationship with a friend. It has to be very, very transparent. And the more you get out of it, the more transparent you are, the more you get out of it. The more you can tell them about your financial goals, the more you can talk to them about your investments, the better. And so really that's about establishing that communication with your advisor, and how often and how frequently you talk to them. Some advisors will only talk with you maybe once a year, which for some that might be okay, but for others, maybe you want to talk to them once a month to make sure you really understand your investment path. Make sure you establish that level of relationship and communication you want with them and service, and the better off you'll be for it. And I want to bring it back again to check registration. It is so critically important, and it's a vital step you should always take when you're making any kind of educated investing decision. Currently, just under 1 in 5 Albertans with a financial advisor check the registration. And you can do that again at checkfirst.ca, top right corner, big red button. You can't miss it. But even I do it with my bank advisors. It's so simple and so quick, but it's such a crucial step before you start investing with them. And once you're done check, you move on to the step of protect, and that's really about doing your homework. And when considering investment, research, is it legitimate? Look into the financial statements of the company. Look into information that's provided online outside of the individual who's offering it. Do your own research. Really look into what they've sold in the past, their earnings, where they're listed, everything about the company in terms of its business, and understand both its industry, its competitors, the investment itself. Really understand the sphere it works in. This is important even with legitimate investments. The better you can understand where it plays and how it plays with other competitors and companies in the economic market, the better off you are for it. A great example, I worked in the tech industry, and tech companies are notorious for being very volatile. So skyrocketing in value, then plummeting the very next day with a product launch. And this is all about understanding really if that type of investment's right for you, beyond it just being legitimate, if it's suitable for your investment strategy. And this really goes into your risk return profile. Now, a lot of people, when they invest, really focus in on the returns of the investment, but sometimes they forget to remember that there is a risk component. Again, higher the risk, the higher returns. So those will always be hand in hand. So it's always worthwhile before you get involved with any type of investment to understand, is this level of risk I'm taking okay for me? Is the money I'm looking to put towards it money that I'm okay with losing? The higher the risk, the higher the potential that you could lose all of it. Can you afford to do that? No matter what, if you are new to investing or you've been doing it for a long time, I always say, always judge any type of new investment by the risk return profile and how it feels for you. And checkfirst.ca also allows you to check your risk profile. You can answer a series of questions through a quiz, and it will tell you what your risk profile is. I definitely recommend you should know what it is and take the test, and then use that for your investments, so you can feel a bit more at ease. You don't want your investments at the end of the day to keep you up at night. And does it fit with my investment goals? You should always have some type of goal that you want your investments to go to. And really, this is setting the time horizon. Whether this is for retirement, that's a long time horizon, or it's for something like a trip, which may be in a year or two, where you don't want to open yourself up to too much risk. Maybe you want to go for something a little bit more safe, like a GIC. So again, investment goals help you pick the investments that are right for you, that fit your time horizon, and make sure that they're suitable for your needs. Are there any hidden costs? This is another great one. Any type of investment product through a bank or through a firm can have a management fee. And it's important to always ask, what are the fees both for the advisor, but also for the investment product that I need to pay into? The better you can understand these fees, the better you can understand how they might eat into your returns and if you're okay with that. And does it sound too good to be true? Unfortunately, this statement still holds true to this day. If it sounds too good to be true, it usually is. Anyone promising guarantees, anyone promising that this investment is guaranteed to skyrocket, these are all red flags that, again, you have to remember to listen to those red flags in your head. And if that one pops, don't ignore it. It's crucially important that you don't act on these investments because you think they're just so good. No research, no financial plan makes you an easy target for fraud. Again, do your research around these investments. The more research you do, the more you can uncover those red flags and if a scam is you're dealing with a scam. And no financial plan really makes you that perfect target for a fraudster who can then kind of tell you the story for you. They can tell you what you need to focus on. They can tell you that you need to build up your wealth right away, and they have the investment for you. The more you can plan out your own financial plan, the better off you are in making sure that when it comes to investments, you take your time and you understand if it's right for you. And remember these tips. Ask questions and demand satisfactory answers. If you're about to get involved with an investment that might be too complex or you don't understand it at all, ask those questions. Don't hand over your money without getting the information you need. And that might be you doing your own research. It might be backing away from it completely. But by asking those questions and demanding those satisfactory answers, the better off you are in getting involved with investment that's legitimate, but also suitable for you. Stick with your own investment goals. Don't let anyone tell you what they are. Just like Mabel said, that individual told her that she needs to start, saving for her retirement. Let you establish your own investment goals and don't let a fraudster own that story for you. Do your research, company, investment, firm, and individual. Again, check that registration. Be skeptical, know and watch out for the red flags of fraud. Go into these conversations with any kind of investment offer sent your way with that skepticism. Make sure you're very keenly aware to those red flags. And talk to others about finances. If you want to discuss whether it's something that you should get involved with, you can certainly talk to maybe your bank advisor, maybe to a family friend or a family member, or to your accountant or your lawyer, a third party that can help you uncover maybe if there is red flags there that maybe you've missed, or just to kind of go over it with you and reassess if it's something that meets your suitability. So it's great to talk to others about your finances, investment offers. And don't be a victim of your manners. If at any point you feel uncomfortable or you feel like something's off, don't feel that you have to hand over your money. No matter how much time you spent with the individual talking about the investment or how much they've given you in regards to getting you to invest. Never be a victim of your own manners. And don't be fooled by appearances. Fraudsters, when it comes to investment fraud, like to put on an air of success, drive nice cars, have a nice house, and all of this could be funded through fraud. And it's certainly not a true north for someone you should be working with, investing with. This could all be from other people who have been defrauded, and appearances can be deceiving. And once you're done all of that, you're ready to invest. And it sounds like a ton of work, but it is. And really, no one cares about your money more than you do. But by taking these steps, you can establish a very credible and safe way to approach investing and any type of new investment opportunity, and making sure that it meets your risk profile and is best suited for you. And again, I just want to talk about checkfirst.ca. It's a great website brought to you by the Alberta Securities Commission, and it has a ton of free and unbiased resources, video learning series, quizzes like that risk tolerance quiz, calculators, budget calculators, We have calculators around TFSAs and RSPs, so you can really calculate how much you have there and how much you're looking to have later on. Fact sheets covering both how to invest safely and wisely, as well as fact sheets around different types of scams and how to stay safe. And most importantly, check registration, a great service where you can check the registration of any individual or firm that offers you an investment. Now, what can you report to the Alberta Securities Commission? Really, it's any suspicious investment. If you're uncomfortable investment opportunity, or you're not sure if you should believe a friend who's been offering you one, contact us. We'd love to talk to you. It's really our job to be there and to help you when it comes to these types of suspicious investments. Don't hesitate to contact us. It's free, and you can do it via email, our website, phone call. We're here to help. And file an investor complaint. If you feel that you have a serious concern about a company that you're invested with, or you believe that company or individual has breached maybe a securities law, contact us. We're here to help. And we also have a whistleblower line as well. So, and really, you can report to us securities fraud, investment fraud, insider trading, stock promotion, selective disclosure, Ponzi schemes, unregistered individuals. But if you're not sure about who you should contact about a particular fraud, contact us anyway, and we can direct you to the right channel and right organization for that particular fraud. And follow us at ASC Updates, both on Facebook and Twitter, as well as Check First on Instagram. Wealth of content there that we promote and put out on a weekly basis, as well as great information on investor alerts and new things to understand in Alberta's capital markets. So great resources to be found there as well. And just to go back to contacting us, you can contact us toll free. But if you want to reach out to myself, you can always contact me at james.mctavish@asc.ca, or through our inquiries line if you have any concerns about a particular investment that you see or might be involved in. It might be difficult to come forward, but the information you provide can really help others who might become victims of fraud, and we're here to help you. At the end of the day, we're always here for you when it comes to these matters around investment fraud. And with that, I just want to thank everyone again for attending this presentation. So now I'll shift gears and we'll open it up to the Q&A portion. Okay. Crowdfunding and robo-advisor. Could you give an example of how crowdfunding and a robo-advisor and how they could work? So Andrew, I think you mean in regards to a particular type of scam. Now with crowdfunding, really this could be around the unclear returns or end state for the crowdfunding of a particular company. So really this is about investing in that company for when it actually goes public or has some type of promise of return. And then the details around that are quite scarce, and you might not get anything back. Now, there's a variety of different platforms out there that offer crowdfunding capabilities and opportunities, but it's worthwhile to understand these businesses that are using crowdfunding to achieve a particular end state or business goal, and how you could be funded or how you could be getting that return back on your investment. There's a lot of different fraudulent ones out there that kind of take your money and are fly by night and disappear. So that's one example there. When it comes to robo-advisors, there's a lot of great robo-advisors out there. Again, Wealthsimple, Questrade, that have legitimate websites, but it's not uncommon for fraudsters to make spoof websites that look like Wealthsimple, but are just fake websites where you log in, you provide maybe your login credentials, and worst case, you also put money into that platform thinking it's real, and they just disappear with your money. So when it comes to robo-advisors, always look for HTTPS. That means that it's a secure website, and that will be in the actual URL when you're typing it in or clicking on the link. and it will have a little lock symbol, and that will tell you that that's a secure website. So that's a great first step to making sure that you're dealing with a credible robo-advisor. Yeah, great question.
All right, James. Well, thank you so much for that presentation this morning. And thank you to all attendees for joining. And with that, we will conclude today's webinar. Have a great day.
Thanks so much for having us. Thank you.
Bye for now.